Palantir's 10K recently came out, and there are some things within that long 210-page document that us Palantir investors should absolutely be aware of. And I'm going to go through some of the most important things in today's video, so you don't have to spend hours upon hours reading. A 10K SEC filing, for you guys who may be unaware of what this actually is basically like a yearly checkup for companies that are publicly traded. It's a very long, detailed report that they have to send, a company has to send to the US government. And it talks through many things, from how much money they made, how much money they spent, to what sort of risk factors they actually see for their business. To keep this video as balanced as I possibly can, I will include both some positives and some potential negatives that I found that were highlighted in the 10K. But as we go through this, make sure to leave your takeaways, your opinions on all of these in the comments below. So let's start with a potential negative. So this first thing is something that has been spoken about within the Palantir community for, quite a number of times. And it's one thing that a lot of Palantir haters, Palantir bears, have used as a weapon against why people shouldn't invest into Palantir a number of times. It is often included as one of the real risk factors for Palantir investors. Now, Palantir, since expanding into the commercial sector, because for a long time they only had their government segment, business segment. Now, of course, they have government and commercial. But even since expanding into the commercial segment, they have had a high client concentration, meaning they rely on just a few clients for a good majority of their total revenue. I don't mean to be so statistic heavy here, but in 2018 and 2019, Palantir's top 20 customers accounted for 67% of their total revenue. And just the top 3 clients in 2018 and 2019 accounted for 1/3 of their total revenue. Now fast forward to 2022 and their top 20 clients accounted for 52% and the top 3 specifically for 17%. In their latest 10K report, it said that their top 3 clients for the years ending 2023 and 2022 were 18% and 17% of their total revenue. So what can we actually learn here? Well, number one, it's declining. The high client concentration has been decreasing. This is good in terms of risk because this means that they are becoming more diversified across a wide array of different clients. They are becoming less and less reliant on just a few clients for their business, for their revenue sources. And it's really obvious why this is seen as a risk. If Palantir are relying on 3 clients to give them most of their revenue or a large chunk of their revenue, then if just one of these 3 clients terminates their contract, reduces their engagement, has financial issues themselves, this would have a significant impact to Palantir. Now, we do have to understand that it is natural and we can expect to see this higher client concentration in the early days of a business. When a company first starts out in their early days, they are very likely to have fewer clients, which means therefore they are definitely going to have more of their revenue coming from less clients. As they expand, as they grow a client pool, as they expand into more geographical areas, this is going to hopefully decrease. And this is exactly what we're seeing with Palantir. However, we do have to ask ourselves, is this still a risk factor? Are we still concerned about this? Is this still too high? It is also clear though that these relationships Palantir have with their top clients are very sticky in nature. This means that the contracts tend to be very long in duration because, often there's high switching costs that come with this sort of software, meaning once Palantir is integrated into an organization, an agency, a business, they are kind of, very unlikely to go elsewhere because it's just too time consuming, too costly, too difficult. And hopefully the main reason, they are seeing benefit from Palantir. This is good news for us Palantir investors. However, Palantir did say in their 10K that historically existing customers have expanded their relationships with us, which has resulted in a limited number of customers accounting for a substantial portion of our revenue. If existing customers do not make subsequent purchases from us or renew their contracts with us, or if our relationships with our largest customers are impaired or terminated, our revenue could decline and our results of operation would be adversely impacted. So this is a risk factor that Palantir are taking seriously and it's definitely on their radar. It's on mine every single time I have data. I like to look to see that this is actually decreasing over time. But right now, for me, I am comfortable with this risk. Now, just before we jump over to the next one, which I think a lot of you investors are definitely going to want to know about, we must just jump back to past Hayley for a minute. If you want to start investing in the stock market, or maybe you're just looking for a good app for market research, I've got a good deal for you, which will give you 5 free shares when you deposit just $100. This then increases up to 15 free shares if you deposit $1,000. And it gives 8.1% interest on any uninvested cash for anyone that opens an account before the 29th of February. This offer has been given to viewers of my channel by Moomoo, an investing app used by over 20 million people globally. One feature that I really like about Moomoo is that you can find out pretty much any information that you need about a stock, about a company within just a few clicks. Right now, you can see that Palantir's revenue is coming from 2 places, government and commercial. And from their Q4 earnings that has just recently passed, we know that their commercial revenue is growing rapidly, especially US commercial. Having revenue streams from both the government and commercial sectors is really beneficial for Palantir because it diversifies their income. And we know, as lovers of all things personal finance and investing, diversifying your income is crucial. It reduces the risks tied to economic fluctuations in any given sector. And also, government contracts tend to provide those stable, long-term revenue streams, whereas commercial offers that more rapid growth and innovative opportunities. Another thing that I like is there's just so much educational content on there if you want to use it. And I'm all about investing into yourself. And with this app, you can really enhance your knowledge. And if you sign up using my link in the description below and you keep your funds at the right level for up to 60 days, you can receive up to 15 free shares. Okay, so the next one we need to speak about is details that were given in this 10K about the share buyback scheme. The share buyback scheme was announced and authorized by Palantir in August 2023. And this was actually a $1 million buyback scheme, which sounds like a lot, but actually when you look at the percentage amount that this would be, it's quite small. Why did Palantir authorize a buyback scheme? Well, let's see what Alex Karp had to say. He said, "We believe in ourselves, which is why we've authorized a buyback to align with this belief in ourselves. Our belief that profitability aligns with our desire to be in the S&P 500, we are going to invest in ourselves and not at a small scale." It is always great for investors to see confidence given by the leaders of a company we are investing into. Now, this buyback scheme, like I said, was authorized in August. It has not yet started, which I think makes a lot of sense. You've only got to look at the stock price to realize why they haven't actually started implementing this. Right now, the stock is actually at a very high price compared to what it has been since the buyback was announced. And we've also not really seen too many signs that this momentum in stock price growth is going to slow down anytime soon. But as investors, we own a little bit of that business. Now, we don't have the right to decide when a buyback scheme is going to be implemented, how much it's going to be, all of that stuff. But we do have to ask ourselves, what is the best use of the cash? And I think different investors will have different opinions on this. So let me know where you sit with this in the comments below. Do you think Palantir should be doing a buyback? Or do you have other ideas for their cash? They've made it very clear in their 10K that even if this does go through, there is no guarantee that the stock price will increase. Typically speaking, buybacks usually do increase the stock price because they reduce the number of outstanding shares, and also they signal to the market that that company believes its stock is undervalued, or they have high confidence for the future. But they are making no guarantees. Next up, we have an age-old debate of Palantir, and that is stock-based compensation. Now, the 10K does clearly show that this has been coming down. We've seen a decline from 21 to 22 and then again to 2023. But it is still quite a significant portion of their revenue. Some investors are really pro stock-based compensation, and they actually see it as a very, very valuable tool for aligning the interests of employees and shareholders. Basically encouraging employees to perform better at the company, and then in theory that increases the stock price as the company is performing better. However, others view it as a very negative thing, as it does dilute existing shareholders' equity. Now, I'm not too concerned because I think that Palantir is attracting the best talent out there. I've heard time and time again that it is very, very hard to get a job at Palantir. The recruitment process is very lengthy, it's very difficult. Jobs aren't just being handed out to anybody. They are attracting the best talent. Therefore, having good stock-based compensation does increase the incentives for employees to perform very well. But I also do think that it is very important, and it's a very good sign that this is coming down. Stock-based compensation is decreasing because it does cause dilution for shareholders. Right, next one. This is all about AIP bootcamps, which is absolutely the magic buzzwords when it comes to Palantir. Has been for a while now, and you can't really talk about Palantir as an investment opportunity, as a company to invest in, without mentioning AIP bootcamps and why they are so great. But let's just back up for a second. For a long time, one of the main problems, one of the main pain points, one of the main issues that Palantir had was actually selling their software, converting to clients. They had very good platforms, very good solutions, technically speaking, but they weren't really able to market and sell them maybe as well as they should have been. So they were good at the technical stuff, but not so strong at the sales and marketing side, which is of course very important. And it's important because quite often when we think about an organization that is a potential customer of Palantir, it's not always the technical people, the people that understand the platforms inside and out, that are going to make the decision as to yes or no whether they want to work with Palantir. So Palantir absolutely have to be able to market and sell the products that they have to people that don't necessarily understand all the lingo and all the jargon. Roll in Palantir AIP bootcamps that have come in and absolutely sorted this problem right out. Of course, AIP bootcamps are a way of business representatives, I should say, of attending a few days, even sometimes a few hour events where they get hands-on keyboard, real experience. They are able to see how Palantir can actually help solve their problems. This makes it way more understandable. They are not having to sit and read through, loads and loads of jargon or watch a video that is really confusing. In just a few hours, they can actually understand without the confusion of how Palantir are able to help them and make real differences to their businesses. This has then meant that Palantir are able to grow their clients. More and more clients are actually signing on as a customer after having attended these AIP bootcamps. They are growing in popularity, and it was just the other day, just in my newsletter at the weekend. If you haven't signed up to my newsletter, do so. It's absolutely free. I'll leave it in the description. That actually we are seeing expansion and growth in these AIP bootcamps all around the world and in all different sectors. They've been so popular that big companies, some big insurance companies that I'm thinking of especially, are actually asking them to do more. They are now doing sector-specific ones. So they're running the chemical sector AIP bootcamps in Germany, I think it is. They're going really well. In 2022, Palantir had 367 clients. As of December 2023, 497. And remember, the AIP bootcamps only started in 2023. So these have really clearly helped accelerate this client growth. In the 10K, Palantir said, our software is currently used across approximately 80 industries around the world. It is applied to a variety of use cases by users across various business functions and level of organizations, including by utility operations analysts, automotive manufacturing workers, oil and gas technicians and operators, and pharmaceutical researchers in the United States, supply chain managers in South Korea, assembly workers in France, public health administrators in the UK and the US, and special force personnel and military officials in the US and abroad. So we have right there diversification geographically and diversification maybe even more importantly across many sectors. And this all just comes back again to their total addressable market. It's big and they are capitalizing on that. And again, that all comes back down to being made possible by these AIP bootcamps. And it's this total addressable market, this idea that there are so many different sectors that Palantir can work within, that Palantir can expand into, and it's just early days, was honestly one of the main reasons that I first started getting really excited and really bullish on this company. Now, talking about how they are capitalizing on their total addressable market, their TAM. The 10K also speaks about how their platforms have become the central operating systems for entire industries and sectors. They have been able to, and they continue to, develop systems to help companies and government agencies manage their entire organizations. So not just a part of their business, but the entire thing. And that is really, really powerful because there are so many organizations out there that just aren't able to do this. And then there are some that are working with Palantir that are able to. And we've also seen how Palantir have been able to develop in conjunction with another company a sector-specific solution. So I'm thinking about the aviation industry and about the healthcare supply chain industry as well. This then gives them wide-scale distribution and very, very real impact. There are many other things that we could have spoken about that the 10K highlighted, but I didn't want to make this video too long, so I do invite you to leave any of those in the comments below. Thanks for watching this video and supporting this channel, and I'll see you in the next video very soon.